Hi everyone, I want to welcome you to this quick video demonstrating PDS Trader. What I'm going to be looking at in this particular video is a new strategy that we've added to PDS Trader in buying options. Now, as many of you know, I love to sell options, and that's what we have based a good portion of PDS Trader on, is taking advantage of time decay. Well, I also like to buy options, but they have to meet certain criteria. And so what I'm going to do is I'm just going to quickly explain what I look for, what the new columns are with the buying option strategy in PDS Trader. And I'm not going to spend a lot of time on that because I do have another video where I spend more time thoroughly explaining the logic behind what I'm looking for when I want to buy an option. But I'm going to explain it in the context of selling options. Now, first, when you open PDS Trader, you just simply go to the buying puts or buying call strategy, which is in the list of strategies with all the other strategies. And you can see that we're looking at an expiration that is 8/23 of 13. And today's date of the video is 8/14. So there's about 8 days left on these options that we're looking at. And in the context of selling, what I'm looking for when I'm selling weekly options is a max flat gain of about 3 to 5%. My absolute minimum is 3%. If I can't get at least 3%, I'm probably not going to sell it. So I'm looking for at least 3 to 5%. And what that means is that if the market goes nowhere, then I'm going to collect 3 to 5% during that week or so that I sold the option. So anything less than that. So for example, if an option only has a max flat gain potential of 1%, that's way too low for me. There's excessive risk with those type options, so I don't want to sell those. Now, because of that, that does mean that there are opportunities to buy them. And just from the average daily volatility, if you can find options that are cheap enough, you can give yourself a very good chance of doing very well with an option buying strategy like this. So these are the two columns that we've added to the buying options strategies. The max loss column, which is again the opposite of the max flat gain, and the break even. Now, no matter what, because we are buying options, the market does have to move in your favor for you to make money. You cannot get around that with buying options. So what we're looking for is we're looking to minimize the amount that the market has to move in our favor in order for us to make money. And you have to also understand that we don't want to hold on until expiration, if at all possible. So I'm looking for a quick move in a stock in order for me to buy an option. But I'm not just going to, if I expect a quick move in a stock, I'm not going to just go buy an option. I actually look at the options first and look at the cheap options, and then I determine whether I think that there's going to be or a potential for a quick move. Now, you've got a 50-50 shot one way or the other, right? So you can increase that by adding some sort of timing filter to the options that you're looking at buying, and I go into that in more detail in my options buying video. Nonetheless, we have the max loss, and I'm going to start with that. And you can see here that there are several opportunities with a very small max loss. And that max loss is relative to the price of the stock. So when I say cheap options, I'm not just saying cheap as in the amount that it costs to buy them. I'm talking cheap with regard to relative to the price of the option and the volatility of that underlying stock. So, for example, here we have a PG, and PG's closed at 81.25, and we are looking at an 81 strike put that the max flat loss is only 0.65, and combine that with a break-even move of only 0.96, and that's really what I'm looking for. I'm looking for low max loss combined with a low break-even, and I actually have filtered, as you can see, max loss, all opportunities that show a max loss of less than 2%, and a break-even of less than 2%, and a strike distance of less than 2%. And if you don't remember how to do that, just click on any one of these columns, right-click on the columns, click on Filter Editor, and you can quickly add or take away various filter criteria in order to reduce the number of options that you're looking at. So that's what I've done, and we're looking at PG. Now what this means here is I can buy the PG. The last was 48. It shows it based on the ask, and that's what we're going to be using when we buy. The last at 48, so that might be a little closer to the actual price. But nonetheless, if I buy PG for 53 and PG moves to 81 tomorrow, I'm likely going to make money on this, and it doesn't take a very big move. And the reason it doesn't take a very big move is because that max loss number is low, and that break-even number is low. And in fact, this becomes a break-even at 80.50, which is again about 1% move to the downside. So this is a very cheap option. And you can look at another one here, GE, trading at 24.07. This is almost at the money. Strike is 24. The bid ask is at 16.17, so we're going to be paying 17 cents. So basically, if the market moves down, and the market moved down 0.5% today, wasn't a very big move down, but it moved down 0.5% today. But all I have to do is have it move down 1% by expiration. So in the next 8 days, if it moves down by 1%, I am guaranteed at least a break even. But the beauty of buying options, if you know what you're doing, is that it doesn't have to move down 1% in order for you to make money tomorrow. It only has to move down a little bit for you to make money tomorrow. So that's the beauty of buying cheap options. And of course, the max loss is absolutely capped. You can't lose more than 17 cents on this particular trade. But if it does move significantly, let's say 2%, you'll double your money. And if it moves 2% within a few days, you'll do more than double your money. But if it moves 2% by option expiration, you will have doubled your money. So it doesn't have to move a great deal in the course of 8 days for you to do very well on these stocks. So that's what I look for with buying options. I just want to quickly run that through you. Of course, I look for the same exact thing with buying calls: low max loss, low break even, and then I look at the chart and apply whatever timing strategy that I have to determine whether I think a move is imminent. You can find out more about that in my longer video on the option buying strategy. All right, I hope you enjoy this new feature in PDS Trader. Look forward to your feedback.